Dev sir, we are live, huh?
Okay. Am I audible? You can start.
Yes, sir.
Can you confirm you can see my screen also? Is my screen visible? Can you confirm?
Yes, it's visible.
Okay. Welcome, Suswagatam. Welcome to this Diwali Picks special webinar. I wish all of you, you and your family, happy Samvat 2020-82. I hope this Moneyfest 2025 festival brings you a lot of joy and prosperity. So without further ado, let's get into our outlook for 2082 and as well as the picks. So as we know, in somewhat 2081 was a year where there was a lot of uncertainty, especially between USA and China. And because of that, the tariff war, the a lot of uncertainty was there in the markets. Now, as we move into the 2082, we are seeing that the this trade war is entering a phase of sharp escalation and uncertainty, especially the US has announced that imposition of additional 100% tariff on Chinese goods starting from November 1st, while China has also responded with a new export control for rare earth minerals and threatened that the countermeasures, if Washington follow them, they will also put new measures. So this is reaching some sort of an end game where the tariffs have reached such a extent that it is no longer viable. But I am expecting that the over the next few months, this will lead into some kind of resolution, and that will help, and it will become the headwinds of 2081 will become tailwinds for 2082. For the last somewhat year, we had a lot of reasons why the Indian markets underperformed compared to the global markets. The earnings growth was lackluster, a single digit earning growth. There was a lot of selling from FIs, as well as there was also geopolitical concerns, Russia, Ukraine, India, Pakistan, Israel, Palestine, and all these related issues led to a lot of underperformance from Indian market. In fact, FIs sold heavily into Indian markets. Now, despite all these external headwinds, I think the domestic growth momentum is back. We are expecting that the FY26 and FY27 will have good earnings growth, and this will be on the base of the 50 basis point CRR cut, the 100 basis point the interest rate cut. RBI has given a lot of liquidity. Budget has given consumption boost, and also last but not the least, the GST 2.0 reforms. So all this leads to, I think, traction in the Indian consumption story. And hopefully, over the next few months, we will have a trade deal with US. So local consumption and export headwinds which are there should go away in this somewhat. And that's why we are expecting good earnings growth in FY26 and beyond. The above normal monsoon, because of that, we have healthy reservoir level water. The services sector has good momentum, and GST rationalization had led to consumption boom. So all this, because of this, we expect that despite this near-term volatility and the global uncertainty, we are looking at a healthy FY26 and this somewhat 2082. So looking at this, we have chosen about 10 stocks on the fundamental side, where we expect that these selective stocks, so stock specific opportunity, will give us good returns. There are some stocks where the broader market are still expensive, and we should be a little cautious. So it is not across the board rally which we are expecting, sector specific, especially the financials, power, engineering. These are the areas where we expect markets to do well. So based on that, we have chosen about 10 stocks. These are four are large cap, mega cap stocks, and six are emerging smaller companies. And a basket of these, a 10 stock, is expected to deliver above market returns. These stocks are also available in our MTF category. So either you can buy them in cash market or one or all individually or combined, you can buy it as a basket. We have a basket Samvat 2082, and that basket is also available as a whole in MTF also. So after this turbulent year, we are expecting that these 10 stocks should give us good returns. So I'll spend about 30 seconds each in each of these companies. So first is the Associated Alcohol and Beverages. It is one of the pioneers in distribution, and now basically they are entering their own brand. So it is a story where earlier they were manufacturing for a larger brands, and now they are launching their own premium IIFL, the Indian liquor brand, and that's why we are expecting that it will give us the good earnings growth, and back of that we are expecting that the uh, earnings will grow and stock prices will also follow. So when we prepared the report, it was trading around 1010, 1010, and we have given the buy on dips level of 918, while the target is 1182 till next Diwali. Second stock, I'm going alphabetically. So second is the Bharti Airtel. Bharti, as we know, is the giant in the telecom sector. They have about 60 crore customers. And the whole story behind Bharti is that gradually they expect that the ARPU will boost, and that will lead to higher EBITDA margin and higher cash flow. And basis of that, they will be able to expand their business. So second stock is Bharti. Third stock is Happy Forging. India-based auto ancillary are looking at a global opportunity where they become a preferred vendor from global auto giants. And Happy Forging is one of such companies which has done a lot of capex, and they are expected to get a lot of orders from India and abroad, and on their expanded capacity in FY27 and FY28, robust growth is expected. And based on that, we are asking investors to accumulate it between 920 to 920, where our target is 1083. Another stock is the IDFC First Bank stock, which is a private sector bank where we have seen that the earlier it was IDFC Limited and now merged. They have about 1,000 branches, and the business model is getting a sea change. Earlier they were focusing on wholesale business. Now they are gradually pruning their business in the wholesale area. About 19% decline in the book is there, while the growth is happening in the retail segment. And that's where we think that the cost of capital can be brought down and the NIM can be expanded, which will lead to good PAT expansion. That's why one more stock which we have recommended is the IDFC First Bank. Now, on power sector, one of the stocks which we have recommended is JSW Energy. JSW Energy is a diversified power generation company from the Jindal Group, and they have operational about 13 gigawatt of the capacity, while another about 14 gigawatt of capacity is coming, and they want to bring their overall capacity from 13 to 30 in next few years, and eventually to 40 gigawatts. So by 2030, they have a vision to make it to 40 gigawatt from existing 13 gigawatt capacity. So that's why we have recommended a very high growing, long duration, and a safe company where your PPAs are long duration, so your offtake is assured, as in when your capacity starts getting commissioning, you will get the benefits of the cash flow. And that visibility makes us bullish on JSW Energy. So that's why we have recommended it around 540 to accumulate it between this level to 487, where our targets are 428 and 639. Another company which is a very famous leading engineering and construction company, which is very famous across the world, and they have 7 decades of diversified operation, is nothing but the Larsen and Toubro. So Larsen and Toubro, as we know, is a premier EPC company. It is into high-tech manufacturing, defense, infrastructure, financial services, IT, and other areas like real estate, semiconductor, and green energy. They are also entering now new areas like data center, and that's why we think that their proven execution capabilities will help this company grow its order book. Right now, they have about, compared to 3.5 lakh crore to 3 to 3 lakh crore of current sales, they already have a 6 lakh crore of order book, and another 14 lakh of crore of orders are in pipeline, which they will eventually try to bid and win. So we see a lot of revenue visibility, and the strategic foray into new areas like green hydrogen, semiconductor, and data center makes us that over a long term they have a good runway for growth. That's why we have recommended Larsen and Toubro as one of the investment picks. Next stock which I want to discuss is MSTC. Formerly, it was known as Metal Scrap Trading Corporation. MSTC is Government of India PSU company, specializes in the e-commerce business. Primarily, their business is e-auction and e-procurement services. MSTC plays a key role in the recycling and the scrapping of the metals. They also have a e-commerce auction platform where they auction coal, telecom spectrum, and now recently they have forayed into the new ventures, which is with the JV with Mahindra, where we are expecting the under EPR policy, the scrappage and disposable of vehicles will take off, and that will lead to strong cash flows. Apart from that, they also have government's e-Upkaran, the new portal targeting the industrial equipment renting business, just like the private sector areas where e-commerce has taken off. We expect this company to also grow these businesses. And compared to their around 27-28% return ratios, the valuation of this company is on forward basis hardly 13 times. So a new age company under government aegis is available, where the valuations are hardly mid-teens, while the return ratios are near 30%. And there is two more new joint ventures which we think that is likely to generate a lot of positivity and growth. And that's why we have recommended MSTC. The next stock in the alphabetical order comes the Northern Arc Capital. It's an NBFC company which is focuses on MSME, microfinance, and consumer segment. And this business basically partners with the other onward lending and fulfill the needs of the another NBFC. So it's another platform business which has they have demonstrated very good asset quality. And as the macroeconomic parameters improve, as the RBI rate cut passes through the system, we expect that the cost of capital will come down for NBFCs like Northern Capital, and that will help them grow their business. And obviously, we are expecting that the second half of the year, because of the GST cut and the favorable monsoon, there should be strong pickup in the credit demand, and that should lead to good growth for companies like Northern Capital. Another company which everybody knows by its brand, the Fevicol, and apart from Fevicol, they have very other important and famous brands like Fevikwik, Fevistick, Roff, MC, Dr. Fixit, Erudite, Fevicryl, and this is the company nothing but known as the Pidilite Industries. It is one of the giants in the adhesive, waterproofing, and sealant business, art and craft business, and that's where we feel that the strong brand recall and the leadership in various categories should lead to good growth in future. Last few years post COVID, they had been going into new categories and trying to invest in the new raw material areas. And I think there we are expecting that the growth will now pick up. And based on that, we have recommended one consumption side story, which is Pidilite Industries. Another stock which is into consumption slash India's urbanization story, where the past few years have been nothing but various in story of consolidation and struggle, where the margins went down after their recent corporate moves, and now we seem that the turnaround is afoot, and this turnaround should lead to a good growth. I'm talking about the company called Sheela Foam. Basically, they are the dominant player in mattresses into India. They have about 30% market share in India. about 40% market share in Australia. 50% of the business is export to Australia, and they are growing well. Their own brand Slipwell is doing well. We expect that their earlier acquisition of Kurlon will also now start aiding the margin, and the margin improvement and the better business mix should lead to uh, return of the margin, which has fallen at a lower level. As the margin reverts to mean, it will flow into the bottom line, which will lead to strong growth. That's why we have recommended Sheela Farm. So if I were to summarize, Associate Alcohol, Bharti Airtel, Happy Forging, IDFC First Bank, JSW Energy, Larsen and Toubro, MSTC, Northern Arc Capital, Pidilite, and Sheela Farm. These are the 10 stocks which we have recommended for this Samvat to be buy as a basket and hold till the next Samvat. And we expect that these stocks are likely to generate superior returns. Apart from long-term investment ideas, we also on the 17th October issued some short-term technical picks, trading picks, and these are Nestle, South Indian Bank, Canada, ABSL, AMC, JSL, and Motilal Oswal Nifty Reality ETF. Now, these are stocks where we have seen the technical parameters improve on charts, and we have issued a report highlighting all these technical parameters. In fact, stocks like South Indian Bank have already seen a lot of momentum. We are expecting that this Samvat year, financial and banking stocks should give good returns, and that's why, apart from the fundamental picks, on the technical side, we have taken South Indian Bank, Canara Bank, and Aditya Birla Sun Life AMC as three stocks from financial area, apart from the Motilal Oswal Realty and Jindal Stainless Steel. So these are the stocks which we have recommended on the technical side, and 10 stocks on the fundamental side. All these stocks are available as MTF on our portal, on our web app. I hope you utilize all these ideas, invest in them, and hold it over the next 1 year. You should be able to generate good returns. So that's what I wanted to discuss quickly about these 10 uh, stocks and our basket, Samvat 2082 basket, which is available both in cash as well as MTF, depending upon your risk appetite and your return expectation. You can invest in these baskets on our platform, and we are hoping that from this Samvat to next Samvat, these companies are likely to generate stable return and should able to beat the markets. So that's what I wanted to discuss today. I hope this has been useful to you. We can discuss about these. If you have any questions, please ask me those questions, and we'll be more than happy to answer you. Happy Diwali, and I wish you and your family all a very happy Samvat. I think if you don't have any questions, let me just see whether there is any questions on these stocks. All right. Thank you all for joining, and we can close. Thank you once again.
Thank you.